providing wealth. Dads, I know that we all want to have more money, right? I want to have more money. Not just for myself, but for my kids and their future. But what's the best way to earn wealth? I want to introduce to you today Ben Leibovich. He's with JustAskBenWhy.com, and he's going to talk about a concept called system building.
The passive income is basically real estate and business income. So if you own a McDonald's, people obviously work there, but you own it, and so you get the benefit of owning it. So folks come and spend money, and you pay your workers, and you pay your expenses, and you keep the lights on, and whatever's left you put in your bank. That's called cash flow. And to you, it's rather passive because, it's not passive in the sense that you have to be a manager, okay? But it is passive in a sense of you are not the one over there making the burgers, okay? And you don't answer to the boss because you are the boss. And then earned income is either W-2, where you're working for somebody else, or 1099, where you're a self-employed individual. And the main difference is that the earned income is much higher taxed. If you're making $200,000 via earned income, it's very easy to see you pay 45%, maybe even more, of that in taxes of all sorts. Not only that, but if you're making that kind of money, the society teaches you to upgrade your lifestyle. You think of yourself as having made it, and you buy a bigger house, you buy a boat, you buy nicer cars. Well, the problem, of course, with that, first of all, and let's just use 50% because it's an easy number. If you make $200,000, but you have to pay 50% of it in taxes, what you are left with in spendable income is $100,000. Okay, that's a huge chunk that you are losing. Now, if you have nicer house and all those toys and the motorcycle and the boat and the vacation house and everything else, you can still afford those things because you are still, after all, left with $100,000 of income. However, what you need to understand is that if you don't show up to work next month, then that income spigot stops because it's not passive. It requires you to show up and see patients. And if anything happens to you, you got a problem. So on the one hand, you can have a lot of stuff, and you can have a large balance sheet that says that you're worth a lot of money. But on the back side of it, it's kind of fake because it's here today, and very easily, God forbid something happens, it's not here tomorrow. Now you cross over to the other side of the equation, which is passive. And of course, this varies dramatically depending on the type of investment and type of business and all of that, okay? But generally speaking, there are a lot of legal, plain stated, black on white, inside the Internal Revenue Code, deductions against income. We call them shelters. They're completely legal. You completely play by the book. But the IRS allows us as investors, because the government wants us to invest in things. That's what drives our economy. And because of that, we get very preferential treatment. So I think I wouldn't be overstating it if I told you that as a real estate investor, if you are paying more than 20% tax, effective tax rate on everything you've got going on, you are doing something very wrong. Most investors pay much less than 20%. So what's investing? Investing is basically you design a system, whether it's real estate that accomplishes it, or a company that you start, or, you buy a franchise or whatever. It's all about a system, and you're running it. So what this means is twofold. First of all, in order to have $100,000 of spendable income, if your effective tax rate is only 20%, you don't need to earn top line $200,000. You can earn $100,000 plus 20%. Okay, let's call it $130,000 off the top of my head, and you're still going to be left with $100,000 of spendable income. So that's one piece of it. And the other piece of it is that hopefully, because the income is generated via some kind of a system, that you can put management infrastructure in place whereby the system can continue to run even if you are not able to be present to it every minute of every day. You can put people into the management infrastructure that are paid well to manage this system for you. And if you are doing this right, then this income becomes much more passive. It's certainly not earned, and it's regenerative in nature from month to month to month. Now, if you upsize your lifestyle, if you are generating enough of this income, if you upsize your lifestyle to a bigger house and a boat and nicer cars, at a certain point, knowing that it's regenerative in nature and it'll come back next month and next month and next month, certainly makes it safer for you to live a consumption lifestyle. So if you do decide to spend more on your house or more on your cars or take more vacations, I think it's safer because you know that income is still going to be there tomorrow. So if you look at it this way, people often ask, how much of your income should you be spending? And people throw around numbers of 30%, 50%. I think that percentage, will vary depending on what kind of income you are getting in the first place, because the safety of the regenerative type passive income justifies maybe a higher level of expense because you've got a lot less liabilities in terms of taxation, and you've got a much higher probability of this income sticking for the foreseeable future. I think what's important most is to realize that you're only one person and your income potential is limited by certain hard limitations, such as there's 24 hours in a day, such as your training will only allow you to earn certain amount of dollars per hour. And if you want to cross that barrier, then you have to be doing something other than trading your knowledge and your skills and your time for money. And so, the basic picture I see or want to paint for you guys is simply this. I work very hard on building systems. Those systems generate income, but I sit on the top of the system and I manipulate the system. And therefore, I'm able to leverage both my time and my expertise to a high degree. And that's what enables me to provide for my family and still stay home and not have a job, is because my systems are out there doing the job of earning currency. It's not me doing it. And I think that most people find out by the time it's too late that they can't earn enough. There are very few people whose earning potential is so high that they can get by. But there's a big difference earning $200,000 being a doctor, obviously a highly paid professional. There's a big difference between earning $200,000 being a doctor and $200,000 being a property owner or a business owner. There's a huge difference, but there are many, many differences in the way the income is generated and what that means. So what I need people to realize, and what, the message that I pass along is, when you are working, ask yourself, can I remove myself from here and keep the income? And if the answer is yes, you could leave for a week, for 2 weeks, and the income would still continue. Then what you have is a system, and you start building on to that system. If the answer is no, if you exit, the income stops, then what you have is either employment or self-employment. And it's very, very difficult to achieve either wealth or cash flow with self-employment, and specifically with employment.
Yeah, I guess right there you're kind of talking about earned income, where what most people have is a job where they trade their time for money, and if they stop going to work, when the income turns off. And it's really not a place where you're free. You're kind of in a place where you're trapped. You have to keep working to keep the income faucet running, otherwise it's going to turn off.
Correct. And at that point, you're plugged into somebody else's system. So you're working for somebody else's company, and somebody else is making money on your labor, your time, and your efforts, which is okay. That just means that they're viewing things a little bit different from you. But it also means that if you can see things the way they do, you can change this picture. I'm not saying it's easy. I'm just saying you can. It's possible.
Dads, I hope you got something out of what Ben was talking about. I know I did.